So today we'll talk about how to make money on slow days. You know, these days where the market is just not moving anywhere, nothing's happening much, it's very sideways, very choppy. Most traders complain these days are boring, but it's actually a very good way to pile up some capital and some gains in your account. And today we'll cover exactly how that works. Alright, so there's a big misconceptions about slow days in the market and days where nothing's happening very much, it's very slow. Most people think that these days are days where you should try to stay away, or they think that these are days where you cannot make any money in the market, that the market is against you or the broker's manipulating or whatever. But these days are happening very often where nothing's happening very much, and you're either going to stick to your own strategy and then lose money in those days, or you're going to try to adapt and do it correctly. And this is what this video is going to be all about. Now, I want to point out first here that if you stay on the side, that's still better than going in the market and losing money. So don't be afraid on slow days to, if you're not sure, just step on the side. Don't take trades, don't force things too much. Just stay aside and look, observe, try to learn from the market. Try to figure out if you can pick a few things to learn and lessons you could take away, instead of trying to go in the market, trying to do new stuff and losing money. It's always better to not trade than to lose money. Okay, now that we've put this aside, there's two ways you can deal with slow markets. First one is to trade the ranges, and the other one is to trade the slow trends. Now we'll go through examples of each of them on the chart in just a moment, but know that you have to be able to spot what kind of condition we're in. Is the market trending or is it sideways? And from there we can start to think of ways to trade it correctly. Okay, so first we're going to do how to trade the range when you have a slow days. Now I'm going to assume here that we trade the New York session, which is what you see here highlighted on the charts, with this big green bar being the open of the New York session, and this one here on the right being the end of the New York session. Now you can see from the beginning to the end, we just stayed about at the same level. Nothing happened. It was very stable. We had a range. We didn't really go out or didn't do anything very interesting during that time. Okay, and then during the Asian session later on, we even consolidated a little bit more. Then had a breakout later on in that day. Now, sure, you could say if you come here in the morning, you could decide, oh, I want to buy a reversal of this. I expect price to go higher over here and reverse from the breakout we had in the London session. But you would just be wrong doing this, because then the day was just a slow day where we had a small pullback, then it came back down, then came back up, came back down, came back up, came back down. All of this into a range of about 37 pips, which is very little for this kind of pair. So how do we trade this? Well, we have a few different ways to do it. First one is, of course, like we said, we stay aside, we don't do anything for that day, we wait for the next day, or we might have a breakout of this. We have the Asian session trending, next day is a lot more volatile with trends, and we can make some money here for sure. Or what we do is, well, we simply decide that we're going to trade the range, and we keep it very simple. Okay, we have a clear range. We know it's going to be a slow day when we see price coming back down, coming back up, and having a very tight range coming back down. Then we can start to look for opportunities somewhere in that range. So if you want to drop down on even lower time frames, you could trade like Bonjour reversals, just what I trade myself a lot on higher time frames. Or you could simply go and see signs of price action reversals. So you see price is coming here. It's making a low. Then we already have our high somewhere over here. Price coming back to that high again here. Not doing anything, came back down, came back up. Now this would be a good place here to look for reversals. See these candlestick patterns? They are showing us we're going to go back down, right? A first big wick, second big wick, third big wick again, sort of these hammer candlesticks. And that should be a place where we want to, after 2 or 3 of these, we can decide to go back and shorten this market. Okay, so I'll put maybe an entry below the low over here. Stop loss above the high, and then that gives you a easy 1 to 2 to 1, right? If you have your stop loss there at the top after these happen, so you want to enter the trade when you see that we make a high and we came back below the low. Okay, here we didn't go back below the low of this wick. We have to wait till we kind of break the low of that wick to enter. So the entry will be somewhere just here below, a little bit below. Okay, we need to break that low of the wick to enter a trade, and stop loss will go above the most recent high. So here we go. This is what it would look like on that chart. Now this gives you a very easy target, right? Because the target, you know, is the low of the range. So we have this over here is our stop loss, and then the low of the range will be somewhere here. All right, you can probably target more than this, but that would be risky. So what I recommend is try to take the range and target around 80% of that range. So here we go. We have 37 pips of range. We might go and target, let's say a 30 pip move on that chart, and 30 pip being from the top of the range. So if you go here and target this over here, 30 pip somewhere over here, And as you can see, our target here was very easily achieved. Now the cool thing with this, if price stays in that range, it's likely to go back and reverse multiple times. So we can do the same thing, and we can actually go and take another trade when we get to the low of that range. Now we do need to wait for some kind of price action pattern to give us some clue we're going to go back up. At least that's my preference. I like to see these kinds of proof we're going to go back up before I enter a trade. So I want to see price making a clear sign of reversal. And we have that just around here with this nice engulfing candle. This is a candle closing beyond the high of the previous candlestick, which we have over here. Good sign of price action, very strong. Stop loss below low. And then we have another easy target of 80% of our range. So if we take this one over here, from the low of our range so far, which is about this one, to the top, around 30 pip, because our range was around 40 pips, or 37 pip, then that will be somewhere around here. Now, again, a very easy target, even a bigger reward to this in that case, because we have a small candlestick of our entry pattern, this over here, and boom, here, 4.45 to 1. Now, this is only a 5-minute chart. Of course, you're going to have some spread, which could account for this if you don't have a commission account, but overall, it's still pretty good. Now, at the end of the day, you could always come back and you want to try to make sure you take trades that are very close to the top of the range, because this will give you a better probability. Now, here we didn't go at the top of the range yet. Here we sort of went, didn't have any kind of price action patterns too much. Although even if you have a loser at the end of the day, you had 2 winners, 1 loser, it's still a pretty good day. So you could have decided to enter over here. This is also an engulfing candle. We didn't quite go to the top of our range yet, but we are close to it. So let's just say you took that trade, put your stop loss somewhere here, and then you've got a trade that you probably close at the end of the day somewhere here, around this level. Or you kept it for longer, which in that case would have been a stop out in that case. So both ways work here. Now I want to show you the reality of this, because sometimes you're going to take a trade. Not all of them will be winners, and that's just part of it. And you should expect that in a day you have a few winners and a few losers, or at least 1 or 2 losers. So keep that in mind. Very important to think about this. So that's how we trade these slow markets. Here we have another example of a slow market. We're just about to enter in our New York session, and let's see how we can play this. Okay, this is the open of our New York session. We have price here going fairly sideways. Okay, we have a small push here, so we could expect possibly a trending days. I could expect for price to go back down and continue in that direction, or we could also expect price to go back higher and consolidate more. That's possible too, but let's see what happens in that session. Okay, we come back down a little bit. Okay, that's cool. Okay, see how now we kind of stopped our trending market, right? We did have a low here, then a low over here, signifying a downtrend. But as soon as price made this new pullback over here, this new low, then this new kind of low consolidation, we know we're not going to be trending too much for that day yet. So interesting to look at this, and a good way to look at this kind of market. Now, where do we go from here? Well, we know that we have a resistance over here. We have one over here possibly also. And we can see where price starts to consolidate and make that range during that day. Now we're clearly staying at that level here. And if I see price being at that level, consolidating for a while, having some resistance here, I might just want to go short directly when we have a move to the downside and kind of try to catch that trend to, here we have a very, very tight range, probably even smaller. But at least we can maybe have a nice trade if we have enough range for that trade to go. Right, so we have from here to here, 33 pips, very little. So let's kind of keep going, see what we have. Okay, we consolidate, still the same level. Okay, now that's interesting. Now, if you take that candlestick here, you could, that's a possible option, but you would have a small target. Because remember, we need to target this level just here below. Okay, now this is a very tight range. We have a 32 pip range. We might have a 20 pip target. Let's see what that would look like here. We go short below here, put a stop loss just above the high, maybe be a bit more aggressive and put it right here. Then our target would be somewhere around 20 pips. That would be tight. That would be too much. That would be difficult to get even a 1-to-1. So let's try to avoid that here. And let's see what else we can find in that market. Okay, if price going down, again, this would not be a very big trade. This would be very small. Now, whenever we come back close to the low of the range here, we can start to look for a bullish trade to the upside. Okay, this will be interesting. We have a nice engulfing candle. The only engulfing candle we have so far in that market, because we closed above the high of the previous candlestick. And the previous one was also a hammer. So I might want to just get into a trade here, see if you have enough room for profit. So I would go long right here, put my stop loss just below the low. I could also be very aggressive if I want to, because it's a tight range and put it just below or engulfing here. Let's do that. Then we can target just the top of the range. Very small target here again, but we are in a sort of slow market in that case, right? Keep in mind. So up to you if you want to do 1-to-1, which will be somewhere around here, or maybe push it to the high of these wicks. I'm going to do somewhere in between, so 1.4-to-1 as my target, just to get a bit more reward to risk in that case, and hopefully the trade can get there and keep going. Okay, so we see what happens here. Okay, we push through. Very nice. Okay, reach. Fairly easy. Perfect. That was very tight, but we reached that take profit. Okay, so can you see how now we have some price action, bearish a little bit, but still not too convincing yet, because we have some wicks here to the downside. The buyers pushed the price back up, so not too much here. It seems like it's hard to take a bearish trade today. We have a lot of bullish, but the bearish are hard to find. Okay, this is where we kind of go slowly with that day, and this is where you cannot have any kind of room for profit unless you trade like a 1 minute chart. If you are trading this on the 1 minute chart, you could catch a move here and somewhere in between. In fact, let's try to, if we can go here, let's see. I'm not a big fan of the 1 minute because it's a very intensive style of trading, but this is where you could kind of catch some money here today. So you have a trade here, short there, long here. Now you could catch some big moves here, especially if you go lower. So this might look like a very small range, but on the 1 minute chart, it's a lot bigger. And we could catch some moves here with kind of price action, and seeing how the price evolves and going back and forth within that range. So kind of a cool thing here. So right over here, if we traded the 1 minute chart, we would go short somewhere here, put a stop loss above the high, and target the low of the range somewhere around here, leaving plenty of room at the low of the range in that case, just to kind of be safe. And then we'll go back and probably go long somewhere over here. When you see that engulfing candle, either this one here, which would have been a stopped out, or we could have been going long just the one after here, like this, stop loss below the low, targeting again the top of the range, leaving some room for profit here, and kind of going like this. So this would have been going a, let's see where we go on this. Okay, well, we would have been going back with that range. Another place here to enter, near the low of that range. Okay, now we are going back and forth. Just going to go back and scroll in the 5 minutes to make it faster here. But that's kind of how you go. So you can always like try to modify it and see if you see price actions reversal and try to get out early of your trade. In any case, I might just keep it and see where it goes. If you're okay with your losses, then you should be fine with this. Looks like our target here was a bit ambitious in that move because this is the high of the range. So yeah, something to take or leave it. You're going to have some losses doing this for sure, but you're going to have some profits that are easy also. Keep in mind we had, if I'm just looking at this one here, we had one profit, 2 profits, 3 profits, then 1 loss, and then maybe 2 losses. So still it's worth it. So we had a 1.4-to-1, we had a 2.96-to-1, then we had a -1. So overall that's, I think, pretty good. Like this is how you trade these slow markets. Now we still are going back at the low of the range. This is where you could still look for price action signals. You had one over here you could have taken and gotten a good move on that also. You also have one where you could have gone short here at this engulfing candle. So a lot of things you can do in that market. Another one here, right? So if I just put these in the chart, we could have gone and traded this one here short, targeting the low of our range again, somewhere around here. Then we could have gotten and taken this one here, just above, go short here, stop loss above here, and targeting again the low of the range, same target or so, maybe a little bit below that. Then we could have gotten and possibly traded the other side, and we could have gotten long somewhere around here for potentially a small move up, but that has to be seen also. Okay, session closes here. We could be out of the day here. Again, we didn't move much in that day, but see how many trades we can take just in one day where we don't move much, right? We can at least take 6 or 7 trades within that day, which is pretty cool. So this is how it works. Now, I also want to cover here very quickly the principle of trading these slow trends in the market, where you have price trending. Usually it's going to happen a lot in the afternoons of the US session, where you have London closing before that, people going home, and only the US traders being kind of at their desk and trading. So you have lunch, you have the afternoon, it's a bit more slow. But if you can just master the trading the trends in that session, you can do a lot better than many traders. Especially those who are trading to kind of go back and forth between the afternoon and taking trades and being stopped out many times. So this works when you have a market where price is consolidating for a while, which we had just over here. Price was in this sort of range, small trend, but mostly range in the morning of the US session. Okay, right about until 11, which is perfectly coinciding here with the lunch hour. Okay, so 11 my time, noon US time. So then we have price getting out of that sideways market in the afternoon and slowly making a trend. Now we see this because we have this new high made by price and we have a pullback, first pullback here. This could be a place to enter the trend already, or if you want to be very safe, just wait for a deeper pullback on that kind of market. So we want to have a confirmation of a trending market here. We have price going back up, coming back down here, and once again coming back up. Now we're going sideways again. Didn't really change anything. Coming back down, but once we start to make new highs, then we can start to go on that trend. Okay, again sideways. Now notice how this low is higher than the previous low we had over here. So this is a sign we start a trend possibly. Okay, not for sure, but very possibly. Make this high, which is higher. It's a good sign. And then the session just ends here with the sideways market for the last few hours of the session. Now, notice how if you trade trends the proper way with this, you wouldn't enter on any of these pullbacks here because it's very risky and will not be trending very clearly in that market. So you'll probably be avoiding this. But on the way a slow day trader would do it in that case is entering earlier as possible, and it's a bit more risky, but if you can catch a day where it's trending very much and you're good to go, then it's going to work out really fun in that case. Now you could combine this with what we talked about earlier, which is the reversal kind of cycle of the slow market, or you could just take these trades by themselves. So what we need to have is a good setup or reversal somewhere within that range. The lower we can take it, the better. Okay, if you can take it here, it's perfect. If you have to take it here, it's okay. If you have to go back here, that's fine. Here is still fine. Here will still be fine. But we're kind of losing some profits, just a potential in that case. You see when the traders were more active, the market was ranging. When the traders were less active, which is probably in the afternoon here, the market was trending, which is interesting. If we can catch that trend, we can make some money, and it's very hands-off from there. So I would personally combine this with my Bollinger Band reversal setup, which is a break of Bollinger Band, price coming back and sort of come back within the band, which we have over here. These triangles here are all these setups. So I would enter just above here, stop loss below the low. So what I would do is I would put a first target near the top of our range. So like we said, same principle, 80% of a range would be my first target. But the other target would kind of run throughout the day, and I'll just leave it there for the whole day. And if I see price coming back at the low of the range, I might kind of stop that trade. Or if it gets stopped out, I might just stop it. But I'll have a first target and the second one that I keep running for longer. So here we go, and I would just enter and calculate the height of the range here to just get a good target. So our range was from here to, if I look at the past, of course, we have a low here and we have our high. Let's say lower high was over here. I want to be conservative in that case. I don't want to push it too much. So here to here. 32 pips again. Interesting. So now I might go and take this, and 32 pips would be, I have a target of around, I'd say 25 pips, maybe before that a little bit. So 25 pips within that range already. 25 pips is here. Okay, so this will be my target now. So I will go and take a long trade just over, actually we have this one, we have a second one here also. So I will take this one. Okay, our stop loss is 5 point, so roughly 6 pips. Target at 25, so it will be somewhere here. Okay, and then this target was achieved pretty well. Now we close half of our trade here. We have the second half we keep running in case we trend in the afternoon. And this is where we kind of see price coming back down, and as long as it doesn't come back at the stop loss, we'll keep the trade open, just as a kind of risk-free trade in that case. Okay, if price comes back here, we get stopped out, but that's not that bad. That's okay. And maybe you want to keep like 3/4 of your trade for this first target, then only 1/4 for the second target. Now, when we get the second target, this is where we get our luck, right? Then we have price moving all the way from here to very far. And you could even, if price kind of trends for the whole day, if you see price kind of holding the support, this is your new support area here. This is your height. You can see very easily where we kind of make a support and we make our high. We want to get out near that high of the market. And here we have, you can find our high. Okay, we have a chance to go back here, very close to that high. And then we can come back here when near that high. These would be places to exit the market in that case. Okay, near these highs of the range. Because there's no price making a range. If price were to keep trending during that day forever, like we have a move here, we go up, then price keeps making lows, making highs, lows, highs, low highs. Then there's no way to get out near the high of this one here. You can wait till this high or even this high to get out. If you have an example where price makes a trend, comes back, makes some lows that are somewhat changing but the same highs, then our goal is to get out near that same high we had before. Okay, this one over here, this one, and this one here. We have many options. We have many options here. So in that case, I might just choose to get out let's take conservative. So I choose to get out somewhere around this high over here. And let's say after this candlestick, just to be very safe. So my exit would be here. I see a big candlestick, bearish, near the top of our range, so I get out of the trade. Okay, that is still here on the second half of the trade, a 3.63 to 1. It's pretty good. Okay, some people want to trade trends, would fail here, but people who just kind of have a normal trade, close most of it already, but keep a second position on just for that trend that could happen, they will make a lot of money in those kinds of slow market. So that's the goal here. So to recap this video, a lot to talk about so far, but the key point is try to take a range trading approach if you can. If you think the market will trend because it makes these lows that are higher over time, then you could go and take a second position that you keep just for the trend. You could see how this trails. You could also close half of your trade at the top of the range, keep the other half on for longer. You have a few options that you can use to trade these slow markets. So don't feel like you have to do this right now. If you see that this is too tough for you now in these slow markets, just kind of observe first, look at the market, see how it evolves, see how you could trade it, look at these ranges, how they happen when the market is slow, what you could do about them, and then apply these principles and try to see if you can make some money with those. I would love to see you crush it, of course. Love to see you get results. If you want to see more videos like this, make sure to subscribe to the channel. I publish videos like this 3 times a week. 2 videos in the week, 1 on the weekend when I have an interview with traders, some things you can learn, some lessons you can learn from these people. And I'll catch you back here in the next video pretty soon. Ciao.